Welcome to the Loveland Report and the Lone Ranger Show. I am Cleve Loveland, Central Florida's voice of real estate, alongside Bruce Woodburn, the Lone Arranger.
Yeah,
the Lone Arranger.
Call me, huh?
There's some names I call you sometimes, but you usually get it done. And I have to pray for forgiveness after that. But you get it all done, Bruce. And we're going to talk today. I've got some news about foreclosures and distress sales. We're going to talk about not looking a gift horse in the mouth. And we're going to talk about the three most important things in real estate: location, location, locations. We'll dig into that. And what do you got for today, Bruce?
Well, I've got a lot of things. I want to give everybody an update on what's going on with interest rates.
You got 6% rates?
Yeah. You can get them if you want to pay for it.
On a 15, yeah.
That's right. And then mixed opinions on what's going on with the Fed. What are they going to do? We're going to talk about inflation. Is it up? Is it down? Are rates holding steady? We're going to talk about where they're lying, what people are doing right now that is very popular to help sell homes and get into a home with a little lower interest rates. And then I want to give an update on hometown heroes. We've got hard money, investors, self-employed, credit repair, physician loans, buy now, sell later. Wait till you hear about this. And then I want to give an update on the Fed meetings that are coming up. So, and we've got a special program called Line of Duty, and I want to share with everybody what Cross Country Mortgage is doing for that. If you have questions for Cleve Loveland, he can be reached right now at 407-352-8118, or Bruce Woodburn, the Lone Arranger, at Cross Country Mortgage, 407-250-9144. Write that down. If you have questions or you want to talk to Cleve and I, give us a shout. You can call or text.
All right. So, Bruce, I want to talk about what I get this call all the time, and it's kind of funny no matter what's going on in the market. And we see headlines about foreclosures have skyrocketed, and the number's gone up from 0.003% to 0.0035%.
Right.
And so I got a weekly report from the Board of Realtors. We don't usually dig into this one, but I just thought it was interesting. You know, guess how many foreclosures there are in the Central Florida MLS, Lake, Orange, Osceola, and Seminole County right now for this 1 week snapshot? How many foreclosures out of 7,000, 9,000 active listings? How many do you think we got?
7.
36.
Well,
active
that's
foreclosures.
more than I thought.
How many do you think sell each week?
1
or 2.
Yeah.
That's it.
I would
That's it.
bet.
So, I mean, you guys don't see any defaults at work, right?
I have no defaults.
I mean, in Cross Country's nationwide, one of the biggest lenders in the country.
The biggest.
And the biggest. And so, and it's just interesting to see. Now, one thing I did pull off this report, so it's funny, like I've got a distress sale we're going to talk about in the listings today. I've got a house for $350. The neighborhood sells for $400. And we're going to talk about that. I see them every once in a while, but there's no more, oh gosh, the bank's asking $150, we'll get it for $100. I mean, that hasn't happened in 30 years. So it's just very
the only
small.
time you're going to get a deal.
They know their value.
They don't play that game.
They don't.
The only and people have forgotten, you realize that was back in the mid 2000s, right? That banks were flooded with these foreclosures. They had the robo sales, but there were so many foreclosures that they were giving them away.
Well, they had to look at it,
manage the whole pipeline.
But they also said, okay, how are we going to handle this so we don't lose our tails?
Right.
And so they get values on it. They got smart on them, and they don't give them away. So
anytime I have somebody that gives me a call and they say, oh, I only want to look for foreclosures, they just aren't in tune with what's going on in the market.
No, because here's the thing I see. I've had a gentleman ask me one time that he goes, I only want to look at fixer-uppers. And him and his wife, after getting to know them a little bit, they both worked, one child, they both worked like 50-hour work weeks. They ran full speed. And I'm like, so when are you going to fix this house up? You know, we looked at there was a couple that were kind of beat up. They needed $30,000, $40,000, $50,000 rehabs on some of these properties. And they didn't care where they were. We were looking all over Central Florida. And I said, when exactly are you going to get this done? You love your kid, don't you? You're going to park them at grandma's house while you do all this work?
People don't realize how much work it is to rehab a home.
Even if you get a renovation loan and organize people to do that, and there's one thing about you moving into a house and then, okay, let's do the kitchen this year. And okay, we're going to move a wall, that kind of stuff. But everybody that starts doing it usually is like, oh God,
well,
never
even
again.
If you hire somebody to do it, you have to still manage what's going on, and you have to be there all the time, because if you leave the work and what's to be done to the devices of the people that are doing it, and you're not there to manage it, it will not turn out the way you hope.
And what I would say is that if you are not a handyman or contractor by trade that does this type of work, don't do it. No. You know, if it's one thing just, hey, let's get a new kitchen. It's another thing to move walls, renovate, whole master bath, all these things that could take months upon years nowadays. And I've got some nightmare stories I could tell, but I think it's more important, get the house you like,
right,
and then get back to work.
Yes.
And the people that fuss and complain about, oh God, I got to find a steal. Literally, if they just went back and focused on work, they could make more money at work.
Absolutely. They could.
I really think that's funny to see out there, because I remember hearing about all these COVID foreclosures we were going to get. And so I was I just wanted to see how many foreclosures we have in Central Florida. And right now there's about 36 homes under foreclosure in Central Florida. So and also there's so many ways now, before 2008, there were no such thing as short sales.
No,
the bank would just foreclose on you.
Absolutely.
But now they've got forbearance, they've got modifications, they've got COVID money out there. And I don't recommend that for people. I always say, hey, get to work, or let's get the house sold. You probably got equity in it.
Right.
Put your finances back together. So anyway, that's what's going on right now. Right now, we've got about almost a 4-month supply of inventory, depending on what you're looking at on single family homes. We've got about just under a 4-month supply. Under 500,000, it's about a 3-month supply. And what's interesting, 500,000 to over 1 million, we got almost a 5-month to 6-month supply. The luxury price category is pushing into the buyer's market range.
Right.
So, be careful when you're listing a house. It's very important you put your best foot forward. What I'm seeing is the houses that are just dynamite. They show like a model home. Those are gone with multiple offers.
Right.
The ones that need a bunch of work and aren't quite staged right,
they're not selling as fast.
And I showed some property last week, and I was like, oh my God, this looks like a crime scene. I mean, the listing agent should have just been, I don't even know if they ever saw the property. I mean, it must have been one of those no service listings or something, because the seller definitely did not get some advice on how to pretty up the house.
Right.
And it was a decent property. And literally the stuff that needed to be done was not a lot of money spent. It was a pod or a garage sale or something, but it's funny. And I have seen them look like crime scenes, but this one was not that bad, but definitely could have put its best foot forward. We saw another house very similar, all cleaned up, and they're like, oh, this is what the other one should look like. So that's the one the buyers went after.
Yep. Absolutely.
So what else you got going on, Bruce?
Well, let's get right into a few things. So first, let's talk about what interest rates did this week, because that's always the hot topic. It's the elephant in the room. The reason the housing market and buyers are down right now is because of interest rates. We all know it. We all feel it. We're feeling it at the pump. We're feeling it at the grocery store. But mortgage rates held relatively steady for the majority of the week. Friday, we had the PCE numbers came out, which is a producer index of what the consumers are spending right now. And that kind of rocked the ship a little bit. So, it's just a volatile market. And things aren't moving in a better direction right now. We have, what do we have? 1, 2, 3 more Fed meetings this year. And 2 of them are before the election. One is on July 31st. I am guessing that I would say 100% chance there'll be no Fed cut. That's my guess. I don't know what the market is saying.
Right now it's saying a 90% chance there won't be a cut, 10% chance they might drop it.
But there's about a 50% chance on September 18th. I wonder why September 18th.
Where'd you get that 50% number?
Because I read it that there was about a 52% chance that they won't lower the rate. That's almost a 50% chance that they will lower it.
Well, I think they will. I just about guarantee you they will, because the deep state, I mean, let's just say it. I mean, the government will do whatever they can to keep Joe Biden, and that's the last rate cut before the election.
The last rate
September.
Cut. Right, so, because the next rate cut after September is on November 7th,
2 days after election day,
which is 2 days after the election.
And hopefully we're cheering.
Right.
So, and not about another Biden.
That'll be an interesting thing. So now, what will happen to interest rates if they lower it? And what would they lower it by? 1/4 point, probably at most. That will have almost no impact on interest rates. It really won't.
It'll settle into the market. It's probably already kind of priced in.
It will be priced in. But listen, when the market improves, rates don't go down as fast as they go up when the market deteriorates. So just be aware of that. I'm not trying to be a negative Nelly on this.
People are in the.
I'm just trying to be realistic.
Good credit. You're in the high 6s.
Yeah, absolutely. Okay. We're locking loans in the 6s right now. If you got good credit. I'm doing a few more 15 years. I'm doing lots of refinances, cash out. We're doing a lot of investor loans.
Now back up. How are you doing cash out refis? People are giving up their 4% rate.
So it's really interesting, Cleve, because nobody wants to give up their 3.5% 30-year fixed rate, right? They don't want to, and I don't blame them. I wouldn't want to either. But what happens is people need money and they get a little overloaded when it comes to the debts that they've been spending. So they look at that and they've got, they got a $1,500 payment at 3.5%, but then they got $1,100 in car payments and $1,500 in credit cards. And then somebody always says, I need 25 or 50 grand to fix my house or do this. A $25,000 home equity line of credit is going to cost you $300 a month.
Yeah.
So you add that debt to it and your debt load's going up instead of going down. So what I've done is I give people an option. Here's your option on consolidating everything into a home equity line of credit, which is cheaper than a refinance, but a much higher interest rate, much higher. Like they're running between 10.5% and 14%.
Yeah.
So then I give them an option and I review whether it's better to do that or it's better to do a refinance. And if you have enough debt, even though you're giving up a low interest rate on the first, you have to look at the whole return. So I took a client, if I would have given them 25 grand and they would have kept their own debt, they'd been paying 5 grand a month with all their debt, right? I refinanced the whole thing, got them down to $3,500 for all their debt. That was saving them $1,500. It was actually $1,900 when I recall my math. It was $1,900. So one of their concerns was, I don't want to pay my car payments over 30 years. And I said, great, then don't. We're going to consolidate them all into it. Now, take the extra $1,900 that you were used to paying and put that on your mortgage. And they said, well, how long would it take to pay my house off? 10.5 years.
Yeah.
10.5 years. They'd have no house payment, no car payment, no credit card, no other debt.
And here's the key. Don't be a refi-aholic and
don't
do that and run your credit cards up again.
And I see that all the time. And I know lenders love it because you just keep coming back. But look, we have to be financially and fiscally responsible. And I want to help clients go into retirement debt-free. I mean, no mortgage, no debt. And if you have any debt, it should only be a mortgage. So let's learn how to manage our money better. Listen, take it from a 10th grade dropout. I've done this before. I made the mistakes. Now I don't.
All right.
So let me help you. Give us our number.
All right. My number. You need to sell a house, buy a house. You need a real estate plan. You want to buy some rental properties. You want to know how to do it. Call me at 407-352-8118. We'll be working all weekend.
Yeah. Or call the loan arranger. I can help you with your credit. I can help you get into a first home, a move up home, a downsize home, an investor transaction. I've got hard money. I've got physician loans at 100%, VA 100% up to $2 million. Listen, anything you need in a mortgage, you have a direct lender, number one in the country, number one lender, retail lender in the country right now, Cross Country Mortgage. I'm right here in your backyard. I'm easy to reach. Our rates are phenomenal. Our fees are very low compared. You check me out against my competition, you'll come right back to me, Bruce, every single
real quick
time.
We got like
407-250-9144 or WeBringYouHome.com.
Minute left. I've got one listing here I want to talk to you about.
All right, let's hear your listing.
For a DSCR duplex in Longwood, all renovated. Income, one side's a 2-2, one side's a 3-bedroom, 2-bath. Rent's probably around $2,000 each side, $2,200 maybe on the 3-bedroom. So let's say they're getting $50,000 a year in rent minus the expenses. They're going to make about 44 grand a year off this house. I mean, take off insurance, take off taxes, and on a DSCR. So if it rents and you're getting $4,000 a month in rent, your payment could be $4,000, right?
That's right.
So that's how the DSCR
Well,
works.
the DSCR, we don't use regular income. We don't use your tax returns or your pay stubs. We can mix it in there, but a DSCR is a debt service coverage ratio, meaning that whatever the rent is that home would receive on a regular long-term rent, as long as your payment doesn't exceed that, that's a 1-to-1 ratio, then that's all the income we need to qualify you. And it's very popular with investors.
Yeah, no, this is one here. I mean, this property here in Longwood, right by the Bright Rail station or Sunrail, and it's in good shape. It's a great, you could live in, this is funny. You could live in one side. Now, how's that work if you're going to live in one side? Do you still do a DSCR? It has to be a primary then, or?
Yeah, they get a little bit more tricky if you're going to live in one side, because then it's owner occupied.
Okay.
You can't do a DSCR on an owner occupied property. It's not designed.
But then you might have a mortgage payment. Let's say your mortgage payment's $3,500, but you're getting $2,000.
Well, the great
rent.
thing about duplexes, triplexes, or quads, if you can find them
Yep.
at a reasonable price, the great thing is that you can use the other side or the other units to help you qualify for the loan.
And we got to go. We got to take a break. We'll be back in 5.
Yep. Stay tuned. We'll be back in 5 minutes.